Hey guys. The purpose of this video is to dissect the new DTCC ruling SR DTC 2021-005. We will cover what it says, why it was delayed for so long, what it means for GameStop and AMC and other meme stocks. This video will aim to please two different types of crowds. Those looking for the quick answers so they can ease off their anxiety, and those looking for a more elaborate understanding of what this very important and significant ruling does. I would encourage all of you to stick to the very end in order to add some wrinkles to your smooth brain, but I understand this advice will be passed off by a significant portion of the audience. As such, I will give a very basic but fulfilling answer in the first 5 minutes of this video as to what this filing means, so those that click off can get what they came for. Those that stick all the way to the end can expect a more comprehensive viewpoint from a legal standpoint as well as from the investor standpoint as to the consequential changes 005 will bring. Drop a like on the video if you feel it helped you. Without further delay, let us jump into the matter at hand. So this new proposal, 005, was originally filed with the Commission in April of 2021 and posted on the DTCC website but had to be subsequently removed to its inability to satisfy a regulatory formatting requirement. Today on June 15 of 2021, the proposed rule change became effective upon its filing. The purpose of the rule change is designed to limit market makers and hedge funds from working together to reset failed to deliver transactions. Because of this, they would be unable to conceal short positions through deep in the money options as they have been doing over the past couple of years. What this all means is that hedge funds have been able to short endlessly the prices of GME and AMC and other meme stocks because they engage in an elaborate process that works this way. Hedge fund comes and sells deep in the money call options while at the same time getting a batch of synthetic shares. The reason for this is because they use those synthetic shares to make it appear that they're closed their short positions. They make it appear in the books that they bought back the stocks that they shorted when in reality they never bought them back, because if they did, it would trigger the squeeze, as we know. This is the end for those apes with too much of a smooth brain and little ambition to understand all that happens. The rest of you, let's continue. So how does all this buying not cause the price to go up, you may ask? Well, at the same time hedge funds buy the deep in the money call options and synthetic shares, they are also buying more and more married puts, which is the term for when an entity buys an option put at the same time they buy a synthetic share. This is how they have been able to get away with manipulating the prices not only of meme stocks but of all other stocks they have manipulated or continue to manipulate. They simply hide and make it appear that they covered, like when my wife's boyfriend covers their dinner dates with the money he steals from me. Now let's bring it back. What does this new ruling have to do with this, and what does it change? The 005 modifies the DTC Settlement Service Guide in the form of DTC Pledges Agreement. If we take a look at page 111, this new modification adds a reporting requisite for its members. They are implementing a new mode of reporting what members such as hedge funds report in the trades that they manage. The DTCC has and is simply looking into decreasing their liability in a risk management point of view. The DTCC implemented this rule to force hedge funds into holding strong to their short positions that they plan to trade and not be able to appear or lie by covering through options that they actually bought back those shares. Because it did not have strict enforcement of monitored shared counts, hedge funds and other members found it super easy to escape and lie and work in conjunction with each other to plan out ways to keep increasing their short positions. As if it wasn't enough, this rule also prevents the positions from hedge funds to be used to complete other transactions, which forces them to fulfill those transactions and account for them on a daily basis with the other proposal that got approved by the SEC 003. The changes in this seem to aim to maintain and establish better bookkeeping, which is what the DTC does. They are purposely adding credibility and a clear system by removing the consequential ambiguity that derived from the lack of information that was provided by hedge funds. The DTC seems incredibly focused on forcing hedge funds to complete transactions in a manner that decreases their skin in the game due to the fact that they know exactly how all of this will end when the time comes. This proposal was most likely delayed for such a long time due to the fact, and this is my own opinion of course, that lawyers probably went through every single proposal and made sure that this was written to perfection and in congruence to other proposals and rules and laws so that hedge funds and market makers and everyone in between caught in margin calls when the squeeze comes are not able to escape the grasp of justice and destiny through some vague loophole. Nothing really changed in the sense that this ruling's purpose is still the same. What changed were small details here and there that give me the impression, based on what I read in the opinions of others that practice law, that the delay was to make sure the format was perfect so the DTC isn't taken to court and forced to have to share some of the burden by Citadel. Let's bring it all back. 005 was implemented today and is effective immediate. It aims to limit the ability for market makers such as Citadel and other hedge funds from working together to reset failed to deliver transactions and conceal their short positions that they implement so habitually through deep in the money calls. This is done by the rule amending some changes that force its members, including Citadel and hedge funds and everyone in between, to report and fill some blank questions that they never had to fill before, which gave birth to this little loophole. The ramifications of this can take a little time to take effect, as hedge funds also have other means to hide their parasitic schemes, but this marks a significant change in this battle. As such, this essentially puts all hedge funds in a tighter corridor where they can no longer act as effectively as before. This is an incredibly bullish development, and you should be jumping up and down like I do when I have a new Patreon pledge support to me. This change will have consequences spiraling from here on out as to how hedge funds operate. Like I said, this proposal works with DTC 2021-003, which is the ruling that forces hedge funds to reveal their positions and have to account for them on a daily basis. Remember, the DTCC isn't your friend. They are looking out for themselves because they know exactly what is about to happen and do not want to be held liable when things start hitting the ceiling. This proposal does not force hedge funds to cover, so don't go into this week thinking that we are about to squeeze immediately. Things like this take their time to have their effect on the markets, but with such an ambitious ruling, expect the changes to be drastic. Hedge funds have been kicking the ball of time for far too long and are now being held accountable and being forced into acting with full transparency, which is the sole purpose of all the DTCC proposals. Remember, this proposal is effective immediate, meaning it passed the moment it was filed as stated in the document itself. With that said, it seems that we are now at a point where all the filings have been passed and we are now just simply waiting for them to not be able to delay the inevitable. It has been a crazy couple of weeks with a ton of speculation as to whether this ruling was even going to pass or if it got cancelled. I am glad that we can all sleep in peace, because let me tell you, Kenny is not going to have an easy night ahead. Our mission is simple: buy the dip and hold. There isn't anything else we have to worry about. Any other proposal that help is more than welcomed, but right now we finally have all that is needed. I'm kissing my wife's boyfriend tonight, because that is how jacked up I am right now. I am off to the gym now, but before I let you go I want to thank you for making it to the end if you did. Your job is simple: buy and hold, and to let me know if this video was clear and you understand what is going on, and again, do not skip this. Please do go in the comments and let me know what you think of the video. Thank you to my Patreons and everyone who donates to the channel. You guys are the support and sole reason I am able to continue making videos and not shaking it for the simps on OnlyFans. This video took me longer than anticipated to make, so please consider dropping a like and sharing it with all your ape holder friends you have. Help me provide people with the right information. I wish you a great rest of your day and to the moon tomorrow.